Today I want to go over 5 dividend stocks that I really like. I own in my own portfolio. I would say that if you get on this video, don't just invest everything you have in these 5 or one of these. I'm very diversified. Most of my positions only represent 1 to 2% of my entire portfolio. There's a couple of exceptions on some income-paying EFTs that I own, but for the most part, I'm very diversified. I just want to talk to you about some, good dividend aristocrat stocks that are out there right now. They're in a pretty good buying position. You'll notice this is different from my normal chart. This is a weekly chart. When I'm looking for dividend investing, long-term investing, that's something I'm going to buy and hold. I typically use the weekly chart, trying to find decent price areas to enter. The first one's Chubb Unlimited. It's an insurance company. It's only paying a dividend of about 1.58%, which isn't great, but it's not too bad. I like it overall. It's just part of a diversification. One thing you notice on this weekly chart is I'm only using a 50 to 200 EMA. Again, long-term investing, that's all that's that important to me. I think Chubb is in a good area to buy right now. In fact, anything probably below 215 I would look to buy. Ideally, I would like to see us come back to this 50 for a buy. We're a long way away from the 200. It's going to be a while before it gets there. If you have time to wait, then certainly you could set an alert in this area and look for a good buy area. I do believe overall the market does have more downward potential, with the things that are going on in the economy right now. So if you're not in a hurry to invest, you could set alerts, in the 200 area for a buy or even lower. And I think that you could probably get into these there. I would be a buyer right here just because I'm investing over time, so I dollar cost average. Which makes which helps make my portfolio grow, and I also reinvest dividends typically. So all of those things, I can buy right here without any problem. The second one I want to look at is IBM. It's one we all know. It's been around a long time. They're a technology and software company. They're changing a lot of things they do in order to stay current with the market, and they're doing a good job of that. I really like the buy area right in here at 128. I certainly don't have a problem buying in this area. Right now, they're paying about a 5.15% dividend, which is a good yield for this type of company. Again, as I said with Chubb, the market is moving down right now, so you probably could set, a buy entry point down into this area if you wanted to, if you're not in a hurry to invest. But if you have some funds that you want to start, picking up a share or two here and there, right now, IBM's in a good position to do that. Long term, it's going to, continue in these levels, barring something major. So as a long-term, 10, 20-year dividend investment, I think you're going to be just fine with IBM. Next one's Pfizer. It's come down a lot lately from this high. If you're looking at the weekly chart, it's broken through the 200. I think this 200 moving average is an excellent place to buy Pfizer. So I am picking up more shares right now, and I'm doing a couple of other entries into this. I think I did a covered call on Pfizer, or maybe a caller I did on Pfizer, so that I could pick up about another 100 shares. And also give me some give me some protection on the downside. If you look at their earnings per share and predict earnings per share going into 2023 or in 2023, there is more potential for downside in Pfizer. I think you could easily come down into this 36 to 38 level. It's very possible they could do that. Again, I'm a buyer at this 200. Most of these dividend aristocrat stocks, I'm a buyer at the 200 almost no matter what. They're paying a 4.08% yield right now. You can expect that to probably bump up, the percentage to bump up a little because stock prices are going down. But I would certainly be looking at picking up here, even though there is potential to move down into this level, just because anything below this 200 is a good area to buy them right now. Next one's a Verizon. We're familiar with the Verizon telecommunications company, wireless broadband. They're paying a 6.81% dividend, which is nice. That they're well below the 200, but the difference here is they're trying to fight their way back up to the 200. And what's going to happen is the 200 obviously is going to keep coming down, and eventually they will get there, but it won't be up at this level. I think they're a buy right now. Yes, you could wait to come down to this 36 level and buy again, and that's primarily because, not because of anything Verizon's doing, because overall their earnings per share going forward are not bad. It's just the market's coming down, so you could simply play the market and pick them up probably a little bit lower. I would buy here, don't have a problem with that. This was on earnings days. You can kind of ignore this large candle here. A lot of times crazy things happen, and it's very possible this candle's not correct on my TD Ameritrade account. I haven't checked it. Sometimes they get some wrong numbers on these long big swings on earnings. I just haven't bothered to change it because I knew what was going on here. This is all one day. But like I said, I would buy Verizon here. Don't have an issue with that. I go back and forth between Verizon and the next one I'm going to show you, which is AT&T, on which one's the better value, and it's certainly an argument that we could all have. I'm going to go ahead and pull up AT&T now. If you look at its chart, it actually, at least most recently, it looks a little bit stronger than Verizon. They had their big sell-off here. They separated from their DirecTV portion. They're trying to get back to their core business, and I think they will. This huge sell-off really seemed unwarranted to me. I think they're going to get things turned around, and they probably have more upside potential, in my opinion, than Verizon does. Verizon's still a good stock, and I would buy where it is. I would buy AT&T here also. Yes, you could come down probably into this level again, just because of market conditions right now. It's going to drive the stocks down, so you could probably pick it up cheaper if you wanted. You just have to keep an eye on it. You could set an alert here at 19, and if it hits back up to 19, maybe you buy then, or even 1950 perhaps would be better. That way you can watch to see how far it drops before you get into it. Right now, it's paying a 5.95% dividend. Of course, had a dividend cut last year, but its yield had gotten way out of sync with its price. And also, they've changed their business. They're bringing some more money in order to build their business. One thing I would tell you, though, as I said at the beginning of the video, don't just look at this video and dump everything you have into one of these stocks. It's very important that you diversify. If you have any questions, just let me know. I'll be glad to answer them. You can put a comment in the section below, like the video if you like it, and if you have anything else, just let me know. Thanks.